All right, guys, I am back. Thank you for rocking with me and waiting for the connection to go through. But today will be some dividends I wanted to cover, some important ones to distinguish from high yield dividends versus normal dividends, and how you can put them into your portfolio. Now, it's not the typical exposing video, so let's jump right into it. Once again, if you guys have any questions, comments, concerns, put them in the chat box. I'll address them while we're live. And let's begin. So, first off, guys, we're on TradingView, and we're going to be looking at some very large high yield dividends for the US companies. Now, these are companies I'm not telling you as a buyer or investor, just to think about adding dividends to your portfolio, because a lot of people think they need to start flipping their money. But if you add a portion of your income to dividends, like for example, you have capital gains, it's like 40% or 50%, and then you have like some type of cash flow dividends for like 20%, and the rest you do like real estate. But if you start mixing things up, guys, and adding dividends, it can be very helpful to building up additional income, like just building up, especially if you have growth dividend stocks. Now, some dividend stocks at top of Wall Street, analysts prefer these dividend stocks for steady income. Now you have AT&T, Realty Income. Like these are just very simple companies that have been around for a very long time. So even if you're building something like your portfolio and you want to like build long term, McDonald's is a very good company. We're talking about a company that's pretty much not going away anytime soon. It may be at a very high price. If we look at MCD on the market right here, now McDonald's Corporation to me it's not just a hamburger corporation. We're talking about like a massive real estate empire. They have properties, businesses all across the world. Now, they are at record highs, but if you start to think about it, if you dollar cost average, adding you to your position from even in the current price, and you start basically buying as constantly possible, you do it over a long period of time, these dividends will definitely start adding up. Now, I believe when you start looking at the dividends, let's run the weekly a little bit. You see, if you even dollar cost average into some of these stuff, it can be very beneficial to your portfolio, especially if you were buying McDonald's during COVID, and then even until today, you're up a substantial amount. Now, is it the best to buy the current price? I'm not here to say that, but if you're dollar cost averaging, building into certain corporations, or you're doing to the S&P 500, adding that to your portfolio will probably be a lot better than adding capital gains trading, because trading requires a lot of risk. This also does require a lot of risk, but you're having some dividend income come in that can compound over long periods of time. So that's just an example of McDonald's. And let's get into some of the higher yield dividends, okay? Now, here are some high yield dividend stocks that I'm not telling you to buy, just to look into. Because a lot of the audience that I talked to prior to making the video was that they were interested in some high yield stuff. And I'm like, high yield stuff is very important. Do I personally buy it? No, I don't buy option types of dividend income. I like, for me personally, I like energy stocks, and energy stocks that pay dividends are one of my favorites. But as we're currently looking at Yield Max, Yield Max is a very high yield paying, hence the name Yield Max. So if you're looking at that, this would typically be a lot riskier. But if you can pinpoint your entry and exit, you can possibly make this work for you. Another one is Roundhill. Now, Roundhill has some other investments like Mags, Drag. I mean, there's some new ones that are coming out. If you guys want to look at this and get into this type of investment style, once again, this is higher yield. So if you're looking to make some income that way, we have Defiance, also another high yield dividend, and Curve Investments. Now, personally, I do not buy these. I'm not trying to give you guys a certain company to buy into, but to give you guys some reference of how the high yield can help you out. Now, let's go look at an example. And I had this on my list, like Lockheed Martin. Now, Lockheed Martin, LMD. I'm sorry, LMT. My bad. So Lockheed Martin is a very, I'll say this. We are in a very warring environment. If you get with the war companies that pay slight, I mean, their dividend is relatively small. But if you start like looking over this company long term, I mean, buying into it is now you're buying it at all record highs. But if you start to really think about it, if you can find a company like Lockheed Martin, right, and dollar cost average into it over long periods of time, you're talking about substantial gain that can typically really help out your portfolio. So if we're looking at like Market Watch, give me a second, I'm gonna go to Market Watch. I thought I had that up already, but if you go to Market Watch, type in LMT, and this is a very good website for you guys to use when looking at dividend stocks. Okay. Now, dividend stocks, this will give you the payout ratio, the payout time frame. You can put some indicators like the stochastics or moving average to see what's actually happening. So let's look at Lockheed Martin. Let's see. Now, once again, Lockheed Martin, there's other big companies you can look at that can definitely help you out. For me, I've been in Lockheed Martin for quite some time. I actually started buying when I was back in the Air Force. Obviously, war stocks, military aircraft. It's an interesting combo. But if we take off, the MACD, take off earnings, take off splits, take off volume, just look at the dividends, look at all. Let that load a bit for a second. Now you can start planning out, like, you can see that Lockheed Martin over the time, and that's probably a special one, since like since the 80s, if you start thinking about it, like, hey, I'm 20 years old, let me find a company that I can dollar cost average that I expect to be around in 20 to 40 years. Do I expect Lockheed Martin to be around in 20 years? Definitely. Do I expect like Walmart, Home Depot, or some of these big companies to be around in 20, 30 years? Yeah. Is it a good plan to dollar cost average into them and can constantly buy on a regular basis despite with the prices? Because you expect that the price would be substantially higher in 20 years. That to me is a very good plan instead of, day trading or trying to flip your account. Now, can you do that with day trading? Yeah, you can flip your accounts a substantial amount, but the probability of that happening year over year is probably not in your favor. But if you're getting constant dividend income and getting to growth stocks at the same time, you're probably in a good combination. Or again with the S&P 500 or stuff like that. And that's just one example. Like if we look at other examples, we have Lockheed Martin. We also have some very good paying dividends. I think I went through McDonald's also. Which look at McDonald's, MCD. Give me a second. Now, I'm not saying, once again, to buy McDonald's. Just find companies, filter through them, and I'm going to show you how to do that on this live stream. When we go through all, we get rid of the splits, get rid of the earnings, MACD, just to see the dividend payouts. Obviously, if you got with McDonald's years ago, you got with a winner. But if you can find stuff that's currently doing the same thing, like certain good trends. Energy stocks are pretty much going to be trending higher. Like, to me, this is pretty much a good bet for it. If this would load, it would be very nice. I don't know. I was having some loading issues earlier with my OBS. Like, I don't know what is going on. Like, even right now, everything's like freezing up and I can't do anything. Like, yeah, it's completely frozen. But while where I don't fucking know. But basically let that figure it out. But when you guys are looking at dividends, try to make a combination and something I do. I like quarterly dividends, monthly dividends, and then there's a few annuals. Now the annual ones, I mean, it's like they pay right before December. You got to get with the X dividend day. So there's things you got to prepare for when getting these dividends. X dividend day. Actually, I had that up on here, but I can't really show you guys because it's not even loading. Whatever. But other thing when it comes to this, when you're looking at dividend stocks, try to find out ones that are consistent. So if a dividend stock paid during the 2007 crash or 2008 crash, all that, and then paid dividends also during COVID, you're possibly with a good company that has a good understanding about what happens with what's happening despite their company doing good or bad. So to me, when I look at companies that pay long-term dividends, see if a company's paid during COVID. If they pay during COVID, maybe if your income drops or trading starts, getting hammered, you get some income coming in, especially like, COVID, it would be very substantial. So that's why I wanted to make this video to, not a long one, but just to give you guys a better understanding of how to measure and how to get, different types of income. I can't show you the charts right now because my stuff is frozen. But for the guys who are in the chat, you have any questions or comments about this? Now, I'm trying to do this like once a month to go over some dividend stocks or specific ones, kind of how I do on Brewing Great Returns, my other channel. So if you guys want some more of that, let me know. I'll see you guys in about 30 minutes for the next live stream. And I'll be in the chat for Discord. But thank you guys for rocking with me, hanging out with me for the last 10 minutes. And I'll see you guys on the next video. Peace. Oh my god, why in the fuck is it frozen? Holy shit, my whole screen is frozen.